live trade alerts, April 2023. You can enroll in the 7-day trial. It's only $19 at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships. April 3rd, solid opening. S&P is up around 18. Volatility is mixed with VIX up 3.6% and VVIX down. New opening trade for Blackstone, B plus grade, picked up $265 of credit, sold the 70, bought the 65. S&P up 15. Volatility was down. Strong price action. VIX closed down. It seems that the market is overextended to the upside, but volatility is saying that this rally has further to go. So we'll proceed with caution and take what the market gives us. We've done very well so far in 2023. Even when the market pulled back around 10%, the only position that was challenged was SCHD, and we didn't even have to roll that. April 4th, S&P is about even. I think if the market is up today, it'll be like the 8th time in 9 days and maybe the 5th in a row. S&P down 24, VIX up 2.4%, BVIX up only 0.8%. I was thinking about making a trade when the S&P was down around 30, but the market has been up so much recently. Minor pullbacks are healthy. April 5th, solid opening. Volatility is up around 2.5%. I'm more conservative because the S&P is still up over 4% from where it was trading just 10 days ago. Usually when the market has that large of a run-up, it will pull back. New opening trade in SPX and Blackstone. SPX is a B grade. Blackstone is a B plus grade. So here we picked up almost $400 on SPX, and then we picked up about $250 for Blackstone. If you want to turn Blackstone into a spread, then I give the long spread leg. S&P down 10. Volatility is up slightly. Amazon down 2.7%. April 6th, S&P down 11. It was down 20 earlier today. Very solid day. The market has turned around with the S&P up 13 and volatility down around 2.5%. Closing trade for NDX. The original is below. So sold for about $266 and bought back for $18. We're at a $250 profit. S&P up around 15 today. Volatility was down. The market's closed tomorrow. Enjoy your long weekend. So we open up some new trades in BND, TLT, and O. 3 new opening trades. This is very important. When constructing a portfolio, especially during uncertain times like now, it's important to have uncorrelated assets. That way you reduce sequence risk, which is what happens when all your positions are highly correlated. I'm also looking at gold and XLE, but they are trading too high. 3 trades above are B plus grades. For spreads, you can buy the $60 long put for BND. For TLT, you can buy the 65, and for O, you can buy the 30. Closing trade for SPX. Original is at the bottom. Close for over a 50% profit. S&P up 4. Volatility was up. We opened 3 new trades, closed out 1. Amazon new opening trade, B plus grade. Picked up around $250 because it actually filled at 83 cents. The market is starting to look a little bit overbought. Volatility is falling too, which is good and bad. Good because all our existing positions are fine. Bad because we collect less premium with new positions, and there's more risk of a large volatility expansion when volatility is low. We'll be a bit more selective in our trades. S&P relatively unchanged, volatility mixed. Entering earnings season, April 12th, bought back BLK. And we also closed out Google. Closing trades. The original for BLK is right there. So sold for 85, bought back for 10. And then Google, we collected almost $300 for that. And then we bought it back for 18 cents. New opening trade in Google, B plus grade. We sold it as a spread, the 85 by 75, and picked up $84. Same as yesterday. Need to be more selective as the market is overbought. That's fine though. If it becomes very overbought, we'll buy options to protect against the eventual sell-off. That way we can profit in all market environments. S&P down 17, VIX about even. Amazon down 2%. Decent day, turnaround day, but there wasn't an increase in volatility. And a move down to 17 is minor. The market seems overbought. A pullback with an increase in vol will allow us to enter new positions with less risk when compared to entering when the market is already overbought and vol is low. Hopefully tomorrow is a continuation of the pullback. April 13th, closed out UNH. So here you can see the closing trade is on top. The original is on the bottom. Sold for $90, then bought back for $8. New opening trade, B grade. I sold the 68 and bought the 63. I was unable to do it as a spread, so I had to break it up. I submitted it as a spread, but it didn't fill, so I separated it. But separating it it led to a worse fill. If you take this trade and submit it in one ticket as a spread, try for 13 cents, then work your way down and see whether it fills. 13, then 12, then 11. It may not be worth it since it's not a lot of premium, but it's a safe trade and brings in something while we wait for a pullback. S&P up 54. Volatility was down. VIX down 7%. Amazon up almost 5%. We closed out UNH and opened a new trade on SCHD. The market's overbought, but it's still 13% off its all-time high. Our portfolio hit a year-to-date high today, April 14th. JPM, closing trade, the original below. Sold it for 44, bought it back for 8. Around $180 profit. Closing trade, original is below. The original was a roll from 110 to 105, where I also reduced the number of contracts from 5 to 4 while receiving a credit. So again, this trade right here, where it shows that you're rolling 5 to 4, this is a roll from the original was when we sold 5. New opening trade, B plus grade. This trade is different than the ones we're used to making. And it's a change from how we used to trade. It came about after I lost money in PayPal last year. So here, this is a long put option, and it provides some protection. The rationale is that we'll need to buy options to protect our account during recessions so that we can make money in all market environments. During times like this now, with low volatility and when JPM has strong price action, protective puts are cheap. Yet there will be times in the future when there's a lot of fear and volatility is extremely high. During those times, these long options, which we purchase during good times, will allow us to make money when everyone is panicking. I only bought one because I think the market may continue to go up, but I have an open order to buy one more in the future if JPM continues to go up. This pullback is good for us. Close out a bunch of positions earlier today. BLK is up with decreased implied volatility. If the market continues to correct, it's healthy because it's been going up too fast recently. Closing trade for BLK. Closed for about a $450 profit. S&P down 8. Volatility is also down with VIX down 4%. We closed out 2 JPM positions and opened a new JPM trade as well. We also closed out BLK today. The market was strong and resilient. At one time, it was down over 30, but it battled back. I still believe that the market is overbought, but there are no signs that this won't continue by looking at the price action and the volatility. April 17th, new opening trade, B plus grade, closing trade in BLK. The original is here. So here we sold for $70 and then bought back for $8. Then I just closed out the UNH trade. I closed this out for a small profit. I've been watching the price action of UNH and the market, and I don't feel confident in the short term to keep this trade open. That was actually a smart move. BX, closing trade top. The original is on the bottom. So we sold it, collected $250, and then bought it back for $90. S&P up over 13. Volatility was down. Closed trades in BLK, and Blackstone opened a new trade in UNH that'll be closed shortly thereafter for a small profit. April 18th, solid opening. We've closed out a lot of winning trades recently for nice profits. Earnings season has also started. Google and UNH are decent opportunities. S&P up 3.5%. VIX down slightly with the VVIX up 5.8%. It's a large increase in VVIX, leading me to believe that there is a decent chance that the market will have a pullback in the near future. April 19th, solid opening, small pullback, but volatility is down or unchanged. New opening trade in UNH. Not much premium, but we've been trading so much recently and I'm still waiting for a pullback. B plus grade will likely close it out early. S&P relatively unchanged. VIX down 2.2%, VVIX up another 8%. One important item to consider, I would estimate that there's a very high probability of a pullback over the next few days. VVIX spiked up 8% today, plus the market is overbought, and VIX is lower than it has been since late 2021. I'm also considering selling some call spreads, but the available premium on the few trades I've targeted hasn't been enough. Closing trade for Blackstone, the original is below. Close for around a $220 profit. New opening trade, B plus grade. I separated it because it was hard to get a fill as a spread, but you can try to submit both legs as one ticket. UNH seems to have stabilized and left money on the table. By being too early, the market is down a bit, which is good. VIX is up around 4%. Again, the goal is to minimize portfolio volatility. As a natural consequence of that, we should consistently beat the market. Closing trade for Blackstone, original is below. Close for a $280 profit. New opening trade, B plus grade. So here we sold 6 contracts of Blackstone and we picked up about around $200, $198. Waste Management, closing trade, bought it back for 10 cents, sold it for $1.55, S&P down 25, VIX up 4%, VVIX up 3.6%, Tesla down 10%. April 21st, decent opening. Market and volatility is about even. New opening trade in BLK, B plus grade, low volatility. We're buying 4 times the long put options and financing it with the short puts. This provides extra protection in case the market sells off and there's a volatility spike. This filled a few minutes ago, closing trade. Don't worry if you see this late and don't have time to close it out. You can close it out on Monday. No need to rush. Original is below. So we sold it for 95 and then bought it back for 10. S&P up 4. VIX down 2.3%. VVIX down 1.5%. Great week for us. We've been very disciplined and patient. Have a good week. Or rather, have a good weekend. Okay, so last week, Monday. New opening trade, B plus grade. VIX is low on a relative basis. When insurance is cheap, it's important to buy it to protect against downside risk. This SPX trade protects our portfolio for years. We'll also sell short-term SPX contracts against it to recoup the theta decay. These SPX contracts can go up 30 to 50 times during a violent sell-off, although admittedly, this one definitely isn't going to go up 30 to 50 times because the strike that I bought was extremely aggressive. So yeah, if I had bought like a $1,800 or like a $2,000 strike, then yeah, it could potentially go up by about 30 times. But this one, I think I bought the 3,200, right? Yeah, 3,200. In that situation, I think a win would be to have it go up about 5 or 6 times, the long put option. So again, let me just recap. So here we ended up buying portfolio insurance. And the reason why we did is because in my perception, the market is overbought and volatility is trading at the lowest that it has been in the past year and a half. So as a result, this long put option, even though it's relatively expensive, on a relative basis, it's actually pretty cheap relative to where it has been over the past year and a half. So I bought something that is expiring in about 4.5 years. So because of that, it's going to significantly protect my portfolio over the next 4.5 years. And I'm also going to finance it by selling some short dated options in order to recapture the money that I paid for the insurance. So not only do I believe that I'm actually going to make money on that long put option, not only do I believe that it's going to significantly reduce my portfolio volatility, but I also think that I'm going to be able to pay for it by financing it by selling short dated options, both put spreads and call spreads that have a much shorter expiration. So yeah, so you definitely have to buy options in order to minimize portfolio volatility and to minimize drawdowns. That way you're profitable in all market environments. I definitely think it's worthwhile to sacrifice 3 to 5% in a bull market in order to outperform by 20 to 25% in a bear market or in a crash. If you don't want to use SPX, then you can use SPY. We'll likely buy one or two more in the future if the SPX goes up another 400 points. The goal is to make money in all market environments. We'll finance the insurance by selling short-dated options. This is vital to reducing portfolio volatility. As indicated, you're welcome to use SPY if you'd like. The UNH trade from last week is now profitable. I was too early on that trade and left a little money on the table. Even so, our entries this entire year have been solid. Regarding the SPX trade, if you want to use SPY, the farthest expiration is December 2025. You can buy a few of those and then sell the same short-term spread expiration that I did. For that spread, you can sell the same strike as I did, since SPY is 10% SPX, or you can be slightly more aggressive than I was in the strike selection of the short-term strike. Also, because our strike on the long put is relatively aggressive, we'll look to close it out at 4x the premium collected. So yeah, so basically what I'm saying here is if you, in the short-term options that I sold, you can be a little bit more aggressive if you are using SPY. So for that spread, you can sell the same strike as I did, or you can be slightly more aggressive if you wanted to use SPY. All right, new opening trade, B grade. This is in Blackstone. We'll likely close it out in a few weeks. S&P up 3.5. Volatility was mixed. Microsoft down 1.4%. Tuesday, solid opening. S&P is down around 18. Volatility is up. Big earnings day. The SPX long put from yesterday can probably be closed for around an $800 and $1,000 profit today. It's hard to tell because the bid-ask spread is wide. I'm not going to touch it because that trade will provide a hedge for us to continue to sell premium over the next few years. We'll likely buy another one if the S&P goes up another 400 points. Just as a reminder, yesterday's trade shows a $1,000 plus gain, trade spreads, and buy cheap protective puts. That's how to be profitable in all market environments. I wanted to sell call spreads too, but I couldn't find good enough trades to warrant the entries. S&P down 65, VIX up 11%, VVIX about even, Amazon down 3.4%. I don't put much weight in today. The market was overbought, so this correction was overdue. I don't foresee the sell-off continuing at this moment. I still believe we're slightly overbought, but let's see how the market trades tomorrow, and we'll react accordingly. Wednesday, solid opening. The market seems a bit weak considering the great earnings from Microsoft. S&P down 15, VIX up slightly, VVIX down almost 4%. Microsoft up 7%. The market has corrected over the past 2 days from going up too fast too soon. Let's see if tomorrow it'll stabilize or whether there will be a further continuation. Also, Amazon reports earnings tomorrow after the bell. Thursday, new opening trade in SPY. So we sold the 395 and then we bought the 392. New opening trade in Waste Management. It's a B plus grade, filled at 49 cents. Closed this trade. We opened it this morning and the market moved strongly up, so we closed it out for a nice profit. So that was really nice. We only held it for a few hours and we made a really nice profit. We sold it for 115 bucks and then we bought it back for 45 and we held it for about 5 hours. S&P up around 79, VIX down almost 10%, VIX down over 5%, Amazon up 4.6%. After hours, Amazon is up $5, but that number was $9 just a few minutes ago. So let's see where it opens tomorrow. We open a new trade in SPY and Waste Management. Okay, and then yesterday, which was the last trading day in April 2023, new opening trade in Amazon. We sold the 91 and we bought the 86. S&P is about even. Volatility is down. Let's wait until later in the day. Here we opened up a new protective put in SPY. New opening trade, B plus grade. That's as a hedge. Options are cheap now. VIX is almost in the 15s. We'll make this money back by selling short-dated premium against it. Plus, we'll make money when vol expands. Again, the goal is to make money in all market environments, trading a few percent during the bull markets to outperform by 20% in the bear markets is a very intelligent trade-off. S&P up 34, VIX down 7%, and VIX up 1.3%, Amazon down 4%. We made 2 trades today. We sold a put spread in Amazon and we bought a protective put on SPY. VIX is at the lowest level since late 2021. Have a good weekend. We'll continue to look for great trades next week. So this concludes April 2023 live option trade alerts. If you want to join the live option trade signals, then you can visit beststockstrategy.com/memberships. It's only $19 for 7 days. Again, that's only $19 for 7 days. And you can enroll to receive live option trade signals.